We were making like almost 300 grand a year selling Yellow Page advertising, but I knew there was this thing called the smartphone that was coming out that was going to eliminate, so I quit that job ahead of it.
What's up, guys? Today we have special guest Rory Lee. Welcome to the show, bro.
Oh, okay. Well, thanks for inviting me, Daniel.
Dude, so you're kind of like a relatively new investor.
Yep.
But you bought 13 rentals or 13 doors in your first 5 months.
Correct.
Which is, to me, like, that blows my mind. Like, just whenever you see like a new investor, usually like they'll buy one in the first year or trying to get started. But 13 doors in the first 5 months, how did you do it? Like, yeah, break it down for us.
I don't know. I think I have a sense of urgency because I'm getting close to my retirement age.
Okay.
I kind of like I wish I did this 10 years ago or 15 years ago, but
I feel like a lot of us, once we find like the magic of real estate investing, it's we all wish we knew this or started this earlier. Like if I was 18 and I do this, like I'd probably be worth like $100 million.
Oh, yeah,
like,
exactly.
But it's just like once you find, it's just like there's so many different ways to like build wealth or build cash flow. But then I think real estate investing is one of the best ways. And then if you can't, it's like something that's accessible to like all of us normal people. But then once you get into it, like it's just like your mind gets blown by what's available, what's possible.
Yeah, I think I just really got the bug. It took me of I guess 30 plus years of working. I finally found something that I really, really enjoy doing.
Yeah.
So when you enjoy doing it, it's fun, right? So I
Yeah.
just got that bug, and I just hope I never lose it.
How did you get started? Was it like a YouTube video? Was it like a course? How did you get started for?
I had like small rentals here and there before, but just nothing serious, And
here in Hawaii or in the mainland?
In Hawaii, I actually had one in Las Vegas also too. Yeah.
Okay.
And then I had some money. I sold my business, so I knew that money that I got from selling my business wasn't enough for me to like retire on. So I knew I had to do something with it.
Okay. And what kind of business was that before?
I was an Allstate agent for
God,
almost 20 years. A long time. Yeah, insurance. Yeah.
That's a whole nother like it's a small business. There's entrepreneurship.
Yeah.
It's very similar to real estate, right? Like I feel like a lot of the things there's a lot of carryover from like one business to another, because when you look at real estate investing, it really is just like a small business.
Yeah. And building a team and things like that. Yeah. But so I had that money. So I knew I had to make it work for me, and I had a limited amount of time, I, just was on social media, and I came across a group called WNN. That was
CJ and
Jasmine's group and stuff like that. And I had looked at other things before, but truthfully, I saw some of their ads, and I actually saw your picture in there, and I had recognized you from talking probably like 5 years ago.
Wow, really? Okay.
Yeah, it was a long time, and I was like, oh. I see Daniel's pictures in there. Like, hopefully there must be legit. You know what I mean?
CJ and Jasmine are good friends of ours, and so
Right. So I saw that, and then I gave them a call, booked a consultation with them, and I joined their community, and just kind of, that was the first step, and then kind of finding a market that's it's hard to invest in Hawaii, right?
WNN Properties, they're like a coaching program, and they specialize in out-of-state rentals, specifically the Kansas City market.
Correct. Yes. Yeah.
And then, so when you joined, like, what was their experience like? Did you pay a bunch of money up front, or was it monthly? Like, how does it work?
I just put a lump sum money. It wasn't too bad. I mean, when they were giving me the pitch, I was waiting for them to tell me it's like 50 grand, or something like that. So it wasn't. It was way less than that. So I'm like, okay, you know what, I think it was like $6 grand at the time. Like, what's the worst that can happen? I lose $6 grand.
Well, I mean,
right?
like it's really interesting you say that, because everybody has a different perspective on money and how much. What is a lot? You're like, so one guy's like, it's only 50 grand. Another guy's like, what is $500? That's like so much. And so like, it just really it matters on like where you are in that point in your life, depending on how much you want to invest. Let's say in like a mentorship or in coaching or in whatever kind of program that you're into.
Yeah.
So you're well off enough where like let's say $6 grand wasn't like a huge thing for you, so you could afford to invest the $6 grand.
Correct. Yeah.
And then once you joined, what did that kind of process look like?
And then you join, and they have like weekly like Zoom calls and things like that, where it's just other people in the community talking about deals. It's pretty much just really hands-on thing. And then what's really nice about it, I liked about it, is that he had actually like a spreadsheet of all the areas in in Kansas City that kind of like outline, okay, this
where
is
to go and where not to go.
Yeah, like the hood or, nice areas or,
That's a big, I think a big part of it is like just knowing the areas and where how to invest in that specific like neighborhood. Because even like in Hawaii, if you grew up in Hawaii, you just know the areas because like you lived here your whole life.
Yeah.
But whenever you're going to a different market, having somebody to kind of handhold you and tell you here's where you should go or here's where you shouldn't go, I think that's like a big benefit.
Oh, it definitely helps out. Yeah.
So you got the spreadsheet, you got some information, you're on these weekly calls. How did you like buy your first deal?
I mean, I hooked up with a great realtor.
Okay.
You know what I mean? Like she's an her name's Serena Bales, and I got to give her a little plug. And she works strictly with investing, and I hit it off with her well, so we could communicate well. And I just started going on Zillow and just literally like looking at like hundreds and hundreds of houses and just running through them, I think
that's one thing that people don't realize is the amount of effort that's required to get one deal, right? You're looking at hundreds and hundreds and you buy one, right?
Yeah.
It's kind of crazy.
Yeah.
But then when you first start as a new investor, I think you don't realize that. Maybe because you're in business, so you realize like the whole leads, like sales, like to actually close
it's like reps and, it's a numbers game, right?
But then as a new investor, a lot of us are like, hey, I will look at like 10 houses and I'll buy one of them, right?
Right. No, you can't do that. Yeah. I mean, you can, but
you got to get really lucky.
You got to get lucky for sure, yeah.
But then how many houses do you think that you analyzed or you looked at before you purchased your first one?
God, probably at least 200.
Okay.
Yeah, at least. Yeah.
And would you say kind of like the average, maybe like look at 200 houses, buy one?
I would say so. I mean, you just got to run through, like literally, what was good is it was right around during Christmas time.
Okay.
So my girlfriend and my daughter were like out of town.
Okay.
And so literally I was up from like 8 o'clock in the morning to like 2, 3 o'clock at night, just had my spreadsheet on one side and like multiple windows open and just like going through them, and just kind of running it and just, you get better.
I went to a mastermind recently and there's another guy, pretty successful investor. And he said like whenever he has these moments of like periods of like where he just completely focused, like for like 3 to like 6 hours, he's just like locked in and just grinding these things.
Yeah.
And he calls it crackhead mode.
Oh yeah. No, exactly.
It's like you get into crackhead mode, like and it's like, hey, you're just like so focused. You're just like analyzing things and like there's a whole bunch like information that's like in your head.
Yeah.
That just like condensed into like one spot and just like focused into like that one goal.
Right. I'm a kind of an impulsive person too. Mm-hmm. I mean, like I see something I like, I really want to focus on it. So, literally I got the bug and it just, I enjoyed doing it.
All your energy just went towards just one thing.
Just went through that, you know what I mean?
But that's why I see like people have a lot of success is like they just focus every single ounce of their being into this one thing.
Right.
And then like you just get like, outsized returns when you do that.
Yeah.
So first deal, after you joined WNN, how long before you bought that first rental?
Like within a month.
Okay, so first month you're already buying something.
Yeah.
Okay. And then within the 5 months, you've already got 13. How did you accumulate so
like
many
the first deal was like within the first month. That next month, like I had like maybe 2 more deals.
Okay.
And then I got another. Then you start networking people, and then some people are bringing deals to you. I got some off market deals, and it just was like about 2 deals. 1 to 2 deals a month for the first one. Yeah.
Isn't that kind of crazy? Like
it is. Sometimes I was like, what the hell am I doing? You know what I mean? But it was fun. So it was, and then CJ kind of put a challenge to me like, hey, at first my goal was 12 or 10 to 12 in a year.
Okay.
And then I went up and we flew up to Reno and he's like, you know what? I want to see if you can do 10 in 6 months.
Okay.
So he kind of put that challenge in front of me, and it just that kind of pushed me.
I love it. I mean, like I think a lot of times we need challenges or we need kind of benchmarks in front of us, and it has to be something. I think there's 2 things. It has to be like something that's interesting to us that we want to achieve.
Yeah.
But there has to be some kind of like it can't be like easy. Like it has to be like at least a little bit of like effort to take it, right? Whereas like we feel like we can do it, but then it's like it's be hard. I feel like that's like the best challenges that that
for
we
sure,
enjoy,
for sure. And I actually succeeded. So I had 13 and 5.
That's amazing.
Yeah, I was just trying to like every house I got, I'd like tell them, hey, I got one more. So
it's really important to have like that person to kind of spur you on or to kind of like, hey, to challenge you, right?
Yeah,
because a lot of times if we don't get challenged or we get comfortable, then like we don't have like that motivation to kind of want to like do more, right?
Exactly.
We're like, hey, like we were doing better than our friends or something else, and so we're just kind of get complacent. But when you have something, hey, like Rory, like I'm gonna challenge you, like why don't you do this? And then you're like, you accept the challenge and you kind of rise to the occasion.
Yeah, because a lot of times, I mean, I find myself too, like I'm just thinking too small. You know, you need someone. If someone else is thinking for you, it kind of just opens it up.
It does. Yeah. That's really powerful.
Yeah.
So 13 doors in the first 5 months.
Yeah.
And then what was like the next step after that?
So after I hit that, so I was on 9. So my challenge was to hit 10, right? Okay. So I was on 9, and then the last property I bought was a 4-plex.
Okay, wow.
So that pushed me to 13, right?
Nice.
You know, and then I was like, okay, like I gotta like stabilize this and get a grip of what I'm doing, right? Because I spent so much time.
Yeah. There's really 2 parts to like real estate investing as with rentals. Is number 1 is acquiring the deal, but the other part is either managing the rehab or stabilizing it. And I think the fun, exciting part is actually acquiring the deals.
Oh yeah.
But then like a lot of like the hard work and like the money is made in when you're stabilizing or making sure that you're keeping up with your property manager, your manager, your contractors. You're just making sure like the bucket's not bleeding.
Right. So I got to that point, and then I was like, okay, I gotta get what I bought under control. So I did that, and then I just kind of realized that it was I had to pivot, because I'm like, well, I bought all these properties, and then I'm gonna look like, hey, I'm gonna run out of money.
Okay.
You know what I mean? So I can't where I want to get to go. This is gonna take me too long to get there. You know what I mean? And I wouldn't have the capital. So I kind of looked at different kind of things, and I kind of settled in to try to buy a little bit larger assets like multifamily, more in the.
Was it like the 4-plex to the multifamily, or was that kind of what sparked the conversation, or how did you hone in on multifamily investing?
It was actually, when I looked at the 4-plex, that was probably my most efficient, best asset that I bought. You know what I mean? So, but then I was looking more into like I guess how commercial deals get valuated. So anything over a 5 and over is considered a commercial property. I kind of wanted to get into that space and, just be able to cash flow, have one roof, it makes it a lot easier, managing
So you have this one, let's say as opposed to like 13 separate rentals, you have one rental with like 13 doors. So
correct.
It just helps you with like the stabilization or like your mental bandwidth on just one asset.
Right. Yeah. You got one roof, hopefully one sewer system, it just makes it a lot bit easier.
But also, and one property manager he'll just go and visit the whole complex versus like driving out to different ones.
Yeah,
right?
exactly.
So,
so that was a big part of it. Yeah.
Well, what's the thought of just buying more, like a bunch of more 4-plexes versus like a multifamily?
So when I went into, I really have been targeting right now, like multifamily, like in say like the 10 to 30 unit range, not something crazy, because there's like 50, 100, 200 units. I actually ended up hooking up with another mentorship program. And I was kind of introduced to the idea of actually syndicating some of these deals. Where you can, get investors and find a deal, get an acquisition fee, manage the deal, and sometimes be able to buy a $2 to $3 million property, or $1 million property with maybe little or none of your own money out there.
But you're sharing the potential profit with other investors is the way it works.
Correct. Yeah, but then actually you're still in control of the property. So you're the general partner managing.
What mentorship is this?
What mentorship? His name is Justin Brenham. It's called Multifamily School.
I think I know that dude.
He's out of San Diego. Really nice guy.
Was he like dating Kate Silverbird or something?
I don't know. Yeah, Justin Brennan.
I think he's friends with Panetta too. So.
He knows them. Yeah. So I was on a family trip in San Diego, and he's based out of San Diego, so he took some time to meet with him, and I really down to earth guy, and very hands on.
So I feel like a lot of times like what can be like good or bad is when you join a mentorship.
Yeah.
There's the mentorship, the coaches or the people who are in this mentorship, they're really bought into like one style of real estate investing.
Correct. Yeah.
And there's so many different ones that do work.
Yeah.
But sometimes like what can happen is like we get blinded where like we only see the pros of that style, but we don't see the cons. And so I've experienced myself when I try to like look into different ones where like this looks really great when it's presented, but then when you see like you always have to kind of find out like where is like the the hidden like dirt underneath like the treasure, right?
Exactly.
They're only gonna show the treasure when like they're presenting the mentorship, right? And
Right.
Like just kind of
they're
going
showing
back,
only the upside,
right? I mean, like, that's what you need sometimes, right?
Right?
You need the motivation, you need like to kind of get started. But as you're kind of going through it, you realize actually this is harder than I expected.
Yeah.
And then here's some things that are not as profitable or as like glamorous or is not as productive as I thought they would be, you know?
Right.
So I mean, when let's say like going back to the rental properties, what made it like good, and what were some of the things that you found that was not as like you didn't realize were gonna be like the way that they were?
What was good about it is that it was a easier way for me to like take action and just get in the game, right? You know, and it allowed me to analyze properties, just know the market, and then you know, most importantly, and you know this in real estate, it's all building your team of people that work for you.
Yeah.
So I knew the neighborhoods very, very well by looking at like literally, I mean, I'm not exaggerating, hundreds, maybe thousands, you know what I mean? So I knew that, you know, I built relationships with people, contractors, property managers, and it allowed me to get into there, but it can be very good. I think if you're very young and you start like say in your 20s or 30s, and you do it consistently over time, it's an amazing way to do it. You know what I mean? If you buy one a year or, you know, house hack or whatever it might be. But for me, I'm like in my mid 50s, the time frame's shorter, right? You know,
so you need a way to accelerate like the cash flow like faster than just picking them slowly.
Yeah.
I mean, are you guys, but in WN they talk about like the burst strategy. Is that something that you considered?
Yeah, no, that's what I did with those things. They were burst. The only thing, it's a little bit difficult right now because rates are high. So you can find that quote unquote perfect burr.
I see.
But if you pull out all your money, it doesn't cash flow, right? And I'm at the point where I'm trying to get some cash flow, right? So I'm leaving money in deals, and you know that's why eventually I'm going to run out of money, right? You know, because I'm leaving, you know, 25% in the deal, you know, whatever it might be, you know.
No, I'm just curious, like just like that, how like that you came to that conclusion, and then did you try anything else besides multifamily in your journey?
So I did the multifamily, and then I was listening to Ryan Panetta's. He's like, you know, wholesaling, you know, and it's a great strategy. It's, you know, and it's like low risk, you know, all your
just marketing,
you just risking your marketing and your time, right? So I kind of joined that, but it was with my insurance business that I'm still kind of doing, and just the time frame, I couldn't put the effort and the time because it's very consuming.
Yeah, especially in the very beginning, like there is a lot of time commitment, I think, especially when you're just trying to like get off the ground. Yeah. Like once you have some momentum, then you can start hiring it out, or you understand the process more. But then, like in the very beginning, it is very time consuming. Yeah. So, this goes back to that whole thing where like everything works, right? Like and then like there's guys who are crushing and making like 7 figures a month wholesaling, right?
Exactly.
But when like they also don't realize that actually it takes a lot of effort or energy to like learn the sales process, to learn all these other things, the marketing things on your journey to there, right? Right. So it's just like there's always these undercover things or things like you don't realize or didn't like expect that you kind of run into obstacles as you're doing these different strategies.
Yeah. I mean, I gave it a shot. You know, I tried it. It just wasn't the right strategy for me at this time, you know.
Got it, yeah.
So it's kind of, you know, you put money into it and you know, you kind of lose money, but it's funny because I listened to a bunch of different podcasts and I listened to that Rod Cleef. Have you ever heard of it? Yeah. So he tells about like all the mistakes that he's made, and he says whenever he makes a mistake, he just calls that like a seminar. It's like a learning lesson, right? Okay, I had like a $5,000 seminar that I went to. Yeah.
Well, one of the things I like about you is that you're a huge action taker.
Yeah.
And I think I don't know if it came from either you're built like this or through entrepreneurship or your business, but like as soon as you have like a goal, I see you taking like massive action. Yeah. And I think like that's a huge part of success in like real estate investing or business in general is you have to see like what steps need to be taken. First of all, like that's where either the coaching or the wisdom or the learning comes in. But once they're in front of you, you just have to like bang that out as fast and as much as possible.
Oh yeah, no, I agree. I mean, definitely, I'm just like any other person. Like, you know, there's days where like, what am I doing? Like, why am I doing this? Like, and you have your doubts. You know what I mean? But you just gotta like know why you're doing this, and you know, kind of just push through it because there's definitely tough days. You know,
have you always been like a massive action taker, or what is that?
I think so. You know, I always you know, like I started my business like when I got into insurance. I was in advertising. I used to sell a Yellow Page advertising. Okay. You know, it was like I mean, God, we were making like almost 300 grand a year selling Yellow Page advertising, but I knew there was this thing called the smartphone that was coming out that was going to eliminate, so I quit that job ahead of time.
Oh, that's really like forward thinking.
Yeah. I was like, this is not going to be around for a while, and people are like, what are you doing quitting? You know what I mean? And I was like, you know what? I want to get into insurance, something that's going to continue
that's
to pay
a mark
me.
of a good good businessman is being able to pivot, especially before like the crap hits the fan.
Yeah.
Because there's so many like things in the world that are changing, where there's AI, where there's like the internet, where there's the coronavirus, these different things are in the world.
Yeah.
And it like really changes the dynamic of like the way business is done in certain sectors.
Yeah.
And if you can pivot ahead of there, then like you either be first in that new industry, or you're not going to take the lumps that are going to come down when that thing like comes and falls, right?
Yeah. You just can't get comfortable with anything.
But you always have to be on the lookout. That's the thing. Like when I first started investing in real estate, I thought I'm just gonna do the same thing over and over, and like the same strategy, the same marketing, and for the next like 30 years. But then like 2 years into it, like the market completely changed. The strategies that were working before are no longer working, and you're constantly having to pivot. I feel like we're pivoting every 3 or 4 months. We're like constantly like changing the direction of what we're doing.
No, for sure, I agree. Yeah.
But there's big pivots and there's small pivots. And so like a big pivot might be like, hey, I want to try like rental properties. Or another big pivot is, hey, I want to try wholesaling. Yeah. The small pivot is like, hey, like let's adjust the marketing, or let's change the neighborhood. Let's adjust like our realtor, or let's judge like our strategy or our sales process. Yeah. But then there's like, you kind of have to give each big pivot like enough time to realize like, is this working? Is this something that I want to do? Or is it just like, did I not put enough energy into it, or is it just like not for me?
Right. I guess, even when I had asked you about that wholesaling, I don't know if you remember, I texted you, like, what do you think about it? He's like, just all the time and effort that you put into it. That's going to decide whether you make it or not, right? Yeah.
So when you're in like your insurance company, what did that look like as far as like your business?
So before I used to run an Allstate insurance agency, so mostly like personal lines, homeowners,
So is that when you run a business, like you buy a franchise? How does that like that work?
No, I actually started it from like scratch, So basically you become an exclusive agent with Allstate, so you only can sell their products. You rent an office space, you have employees, and I started my Allstate business actually in 2008, right in the meltdown.
Okay. Was that a good time to start or a bad time?
It was actually a really good time. It was like the worst business time ever, right? During the meltdown. But what it was is when you start a business, like in the personal lines, you're trying to just basically get people to like, everybody has car insurance, right? So you're getting them to switch to you instead of Geico, So because everyone was, having such a hard time, they were more open to trying to
something different
to like, hey, I was like, hey, you mind me giving you a quote? You might save some money, you know what I mean? And, when everybody's rolling, they don't care, right? But if they're if things are tight, they go, I'll let you look at it, you know what I mean? So it was a good time, actually.
Is it so? Like in the insurance business, is your valuation based on the amount of like subscriptions that you have?
Yeah. So the valuation of the business is based on like your revenue. It's a multiple of the income that you're bringing in, like revenues. It's usually like maybe a 2 or 3x multiple of what
the net revenue for the year.
Well, not necessarily the net, just the commissions. Like like so say in my Allstate agency, I was at. I'm just making up this number. Just say like 3 million well, it's actually the commission, right? That's coming in. Yeah. Yeah.
So I mean, because like this is really interesting. That just like I've seen like how businesses work is that some businesses are easy to sell, other businesses are hard to sell. Yeah. And some businesses are like there's a lot of like profit to make up front. Some businesses take a long time. So I've got a buddy who's in pest control. Okay. And he said it's like very slow in the beginning, right? Because like you're trying to get policies, you're trying to get subscribers. Yeah. You slowly build this snowball, this giant subscriber base. Right. But now you can sell this for like a 5 or 10x multiple because it's so safe. Like, right. I'd imagine that like insurance would be the same way where it's very slow. You're doing 1, 2, 1, 2, 1, 2, and then over time you got like 100, 200, 500.
Yeah, thousands of customers.
And then at that point, now like you've got this big, like it's very safe because you've got all these like recurring policies, this recurring revenue. Exactly. And then when you exit, you can exit with like a pretty nice like multiple on that.
Yeah. But then the only thing about that is then you have like the reason why I got out is then Allstate they're the giant, right? They change the rules of the game, and then all of a sudden now it's
so they can dictate like the percentages,
the commissions, you know, like so that was one of the reasons why my thing on Allstate was to my insurance business is to build it up to a certain point, and then you can kind of cruise, you know, and you get this recurring income. But then they kind of like, oh, we don't want to do that, you know.
When things are tight on their side, they can start squeezing you for more.
So that's kind of I was like, you know, I just was kind of burnt on it, and I had a buyer that was gonna buy it. It just was a, you know,
that's good. I mean, I'm just curious, just because like looking at us from like our company, like, you know, like flipping houses and things, like it's not completely sellable because we're constantly like we have to acquire every single time, but like a rental portfolio, that's another thing where it's like you build it up big enough, and then like it's a sellable asset that you can sell this portfolio to and it's like it's very easy to sell. The way that is valued is like similar to, let's say, like a multifamily, where it's just you have this portfolio that's worth a certain amount, and then there's a valuation, you can sell the entire thing.
So good.
So, okay, so going back to, so you did single families, you did wholesaling, anything else before you did the multifamily?
No, that's about it. Yeah.
But you only listed what, like, how long have you been listed?
I mean, less like 10 months.
10 months. Wow, that's crazy. I mean, it's a good pace.
I mean, it's a good pace. You know, I mean, when you're doing multifamily, like the type of deals that you're not going to go at that same pace. You know what I mean?
That's the one thing that I found in multifamily is like, it's just a lot slower. Whenever you're in commercial, whether it's multifamily or office retail, is the speed at which things will like happen, whether like even when you're in contract, like, you know, like the contract, it takes like sometimes like 90 days to close. And then once you close on it, like it takes another 2 years to like turn the asset around. It's such a slower like pace of game, even though like the payouts could potentially be like a lot bigger.
And it's what's different too is in like when I'm buying single family homes, I can do most of the things myself. You know what I mean? But in the multifamily space, a lot of it is like is you're partnering with.
It's a team sport.
It's a team sport. So luckily I found out with another person I met in the WN community, Austin. He just gonna plug him too. You know that, you know, if you have another person that you work with and has the same goals as you, then you can kind of go along, you know, and find, you know, work together. Because at first I tried to do it myself, and it's like just so overwhelming. You know.
So how long have you guys been partnering together?
It's only like maybe a few months. You know what I mean?
That's good. I mean, I think partnerships can be like challenging too, because like there's so many pros, but there's also cons. Like now you have somebody to share the workload. It's more fun. There's more energy. But at the same time, like when you guys disagree on decisions, that's when it's like, hey, like I want to go this way, and the other guy wants to go that way. That's when it can kind of get like dicey or challenging.
No, I agree. That's why. I mean, what's good about me and him is that when we talk, I mean, we might not do every deal together, but you know, before we get into a deal, we usually have a good sit down and say, okay, this is what we want from it, and are we okay with this? And you know, and just make sure that it's all. Don't postpone having that uncomfortable conversation. Have it up front.
You know, also think that, so being in like multiple partnerships over the years, one thing I found is that the relationship or the how often you meet in person makes a big difference in how successful the partnership goes. And the reason why I say this is because like sometimes we have like partnerships with other investors, and then like we don't ever talk to each other. And then when things like come in, that's like, let's say like they overcharged us for something, or you didn't pay for something, you're like, oh, this mother effer, like you didn't do this, right? But then like he's not getting the benefit of the doubt. But then like if you guys are, if like we're hanging out, like let's say like every week and we're talking, it's like, it's just a mistake, Roy. You made a mistake. Like he's busy and something. And so like it's a big difference when you're meeting regularly, or you have like you're in constant contact, and you're like, and you can just like, hey, like this invoice was too high or something. Like what's the my bad, something like I was like must be like smoking crack that night or whatever. It's just like, but it's like you can solve these,
it's
like
more of a trust factor.
You can solve these small issues like faster. Versus like if you don't talk to each other for a long time, they kind of balloons, or you're losing like the benefit of the doubt that you would if you're not like in constant contact. But it's also can be a pain in the butt, because like we're all busy people, and then we don't have time all the time to like just meet with our partners, or just like to stay in, like, because we've got like families, or we've got like hobbies, we've got other business stuff we got to do, and so it's just carving out that time to meet regularly with that person. And I think it's really important, but it also can be a huge time thing. So there's always that balance of it. You know?
That's good.
So going into like your journey in multifamily, like what do you kind of see for our vision for like the next 2 to like 5 years?
So my goal is to have in 3 years, I have 200 doors.
Okay.
In 3 years, yeah.
I mean, a lot of times I think people focus on the door count.
Yeah.
But then what's more important is actually like either the net worth or the cash flow. Right?
Yeah.
Because like there's guys who have like, let's say like $10,000.
Yeah.
And they're worth like $100,000, right? Because they've got like 1.01% of whatever the deal and stuff.
Yeah.
Or let's say like they have like some deals go south or whatever. And so I think like when you're looking at like your future, you want to say, okay, what's either my net worth or what's my monthly cash flow? You know?
So my net in 3 years, I would like to have the 200 doors, which hopefully should equate. And I might be thinking too small, but like I'm thinking like $20,000 a month of passive income.
Okay, $20,000.
That's where I'm at. I want my goal to be at 3 years.
Net $20,000 a month, right?
$20,000 a month.
And then what do you think? Like, what would that be the net worth at that point in time?
I would probably say maybe 3.5 to 4 million. Yeah.
Because I mean, it's always interesting to see like how people equate like net worth to cash flow. Because when you look at it from like let's take a stock market, like they say like, okay, like you take 4% from like whatever is your portfolio worth, and that's your quote unquote cash flow, right? Yeah. But then real estate is very different, where you can have like really outsized returns compared to like your actual like net worth. So your net worth can be like $1 million, but you could be making like $30,000 a month depending on how you structure it. Like,
So, I mean that's kind of where I'm at right now. I think I've finally found, like I said, I totally enjoy it. So I feel that I could do this for as long as I can. It's fun for me. You know what I mean? I love it, you know? So
what do you like it more about the multifamily versus, let's say, the single families?
Well, I actually like single family.
From a fun factor, right?
I like single family. I enjoy them both. It's just that the single family, it's going to be too slow.
I see.
But I can't get off. Like every night before I go to bed, I'm on Zillow.
Okay.
Looking at houses, just because I want to know what's out there, what the market is, right? Yeah. But I guess what's the fun factor, I've always liked math. It's just the numbers, that I think I enjoy about it. And then I think the thing about multifamily is that it's, you're also... you are doing something that's good. Hopefully you're providing, a affordable place for people to live. Yeah. That's, I try to make my places nice, that, it's not Kahala or, or something like that. But, it is fun because you feel like you're building something. I think that's
well, that's one of the things too, and the government agrees with that, is that when you're a landlord, I think we get like a bad rap as landlords because people think we make a lot of money, which we don't. Right. But then the thing is, like, you're providing like one of the most valuable services for like the population, right? It was like a place to live. Yeah. And so like if we didn't have landlords, and like if people had to figure out by themselves, like nobody would have houses, or there'd be like a very amount of people who could actually afford to like buy their own house and live in it, right? Yeah. But by having like creating landlords, and then the government actually giving you tax breaks or incentives to do this, now you're incentivized not only for the good of the people, but also because you make a profit. So it's kind of like it's the government wants to incentivize like the well-being of the entire population, and they do that by either tax breaks or certain other incentives. Yeah. No, it's I mean, because not everybody can buy or even want to buy a house, right? A lot of people also like a lot of risk too, right?
Exactly.
It's not always like profit. There's also like losses, and there's also other things like headaches and things, right? There's insurance. There's like maintenance, right? There's like people who like runaway contractors with money and different things, and so.
No, and it's like when you're renting to it, you have that, freedom where, like if I don't want to leave, I just go, or if something's broken, I call somebody else and fix it,
Actually, like for when it comes down to like our like long-term plans in the future, I think me and my wife probably will just like rent like where we live. I think that's like the plan, because like you want to own like rent real estate for like wealth building. Yeah. But then where you live, if you just rent where you live, then like a lot of times the rent is gonna be a lot cheaper than your mortgage.
Exactly. And
then like you can like live in a like let's live here for 6 months. Let's live here for 6 months. You can move around, and when things break, like you have like no stress. Like it's not my problem.
One of my dreams, I want to live in like New York for like a year. Just rent a place over there and live in Manhattan.
I mean, we were just thinking like, hey, like later in the future, like let's just rent like some like $10 million like mansion and like in Kahala, right? And you pay like $10,000 a month or something stupid. The mortgage is like $30,000 or $40,000 a month, right? So like it's a fraction of what it would take to get into that as a real house, but then you can experience the same like living experience as the owner.
Exactly.
Yeah, so.
Exactly.
So, I mean, multifamily investing, are you focused in a specific market? Kind of like what is like your...
Yeah, so I'm very familiar with Kansas City.
Okay.
You know,
because that's where you did all the single family.
Yeah, that's why I have the single family. So I'm not open. I mean, I am open to like other places, but I have teams over there, people I can trust, and I'm just super familiar with that area. Yeah. So what I try to do is I'm not... My buy box and what I'm looking for is things that are like not in the urban core. So I'm looking in the suburbs.
Okay.
That typically a C building in a B or A neighborhood. Okay. So I'm looking for like a building that's like maybe built 1970 to 1990-ish. You know what I mean? Not that old. Yeah. That's maybe just a little bit worn down, but that's in a nice neighborhood that I can come in there and fix up.
I see.
And
the thing is, like, because you can't control the neighborhood,
right?
But you can control like the how good or bad the property looks, right?
Right.
So then, like, when you come in as an investor, like, you want to look for places where like the neighborhood has like the potential to have a high valuation because you can't change that, but the property is in like bad shape because you can come in and fix that, get it up to where the neighborhood is, like it matches the neighborhood, and then the value will match like where it should be.
Exactly. So it's you know, it's easier. It takes patience to find that particular
type of like
asset,
deal, right?
You know what I mean? But then when it comes,
you
just gotta like hop on that. You know? Yeah.
So how many doors are you looking at? How big are these buildings are you trying to
they're typically like 20 to like 30 unit.
Okay.
Yeah. So I got in. I partnered with another person that was a 34 unit apartment. But that wasn't my deal. I didn't originate that one.
Got it.
But you know, that was a way for me to get into that space, you know, raise some money and get some equity into that partnership, and, you know, just kind of learn from the inside, you know. So I got into that one, and literally just today I was just telling you I got an offer accepted on a property that was just brought to me yesterday.
Okay. So like so you just got a new one accepted.
Yeah. So like yesterday, one of our brokers brought me this 16 unit apartment. Is like 13 2 bedrooms and 3 bedrooms in this area called Lee Summit, Missouri. It's a nice suburb. Great area. So it brought it to me at 9:00 in the morning. I was driving to an appointment. I'm like, this is exactly what I'm looking for. You know, I got out of my appointment, went back home, ran the numbers, put in an offer, and
the contract?
He got under contract. Yeah. It's kind of like my first one. That's my own deal that I found. So, you know, now the hard work begins, right? All the due diligence and, you know, getting all that. But
you get your foot in the door, right? That's that's important. But obviously there's like a lot of deals that they'll fall through, or things will come up, or like, let's say you can't, like the numbers don't end up being what they should be, or you can't raise the money. There's a lot of big challenge that could happen like down the line. Yeah. But then the first step is like, okay, let's actually get it deal,
under contract. Yeah. So I'm excited, you know.
So I mean, in your journey, your short, was it 10 months of being a real estate investor?
Yeah.
What do you think has been like the biggest challenge for you personally?
Even though I'm an extremely positive person, it's just, you know, there's so many, like, you get body blows. You just get knocked down every single time. Just making sure that you just do not let that affect you.
I mean, like, it would be really helpful for just two people to hear, like, what actually happened that was really, like, discouraging. Or
like I bought this one house, and, you know, maybe I'm cash flowing on that house $200-300, right?
Okay.
And it's in a great neighborhood. I love it. It's the second house I bought.
Okay.
You know, I love that house.
Yeah.
But then, you know, in Kansas City, there's like, it's 100 degrees and then it's 0 degrees, right? So there's, you know, all these shifts. So there's like, and there's a lot of rain that comes down every. So one day we come in and there's like the basement's like full of water.
Oh, wow. Okay.
And I'm like, okay, what's that? You know, I can't have that, you know, because then, you know, the walls are pushing in and it's maybe something that I didn't quite maybe just miss in the inspection, or just couldn't see. But turns out the house is on like kind of on a hill. So all like when it rains really hard, the water's just like.
Is it from the ground coming up, or
it's coming down. Maybe it's a little bit of both, but it's mostly from coming down the hill.
Well, I mean, that's good. I mean, you want it to come inside the house, not come from the bottom, right?
So, but anyway, like I had to spend like 15 grand
wow,
for them to like, they trenched all the way around the house and put these like French drains that drain the water over there, you know? And like 15 grand, that's my like cash flow for the next 5 years. And that gone, right? You know what I mean? But you gotta look, hey, you know what? You're protecting your asset. If I don't spend that 15 grand, you know, my house might fall in, right? So it's, you know, there's those like little things, you know, that's probably one of the biggest challenges. And then obviously, I think the other biggest challenge would be, you know, just, you know, money, right? Capital, unless you're
running out of capital to acquire more.
To invest, right? You have to learn how to be able to. The
other thing too is you gotta be able to manage your capital, because I think a lot of times this happens to us too, where like your eyes are bigger than your wallet.
Oh yeah,
like,
for sure.
Like you think you can handle more than you actually can. Then when you buy, you're like, oh, actually this is more expensive, or it takes more capital or reserves than I was expecting.
Yeah.
Now like you're short somewhere else, and so like now like, okay, like now how are you gonna make up this difference, right? So like there's moments like that, I think, as an investor, where like you just don't calculate like how much it's actually going to take to run this deal.
Oh yeah, for sure. Always budget more.
Yeah.
I mean, like I'm in a deal right now that it's another house in Lee Summit that I got for the super, you know, cheap. But I thought, okay, you know what? Okay, I have to put maybe 30,000, 35,000, but now I'm like over 50 already.
I mean, after doing like so many of these, like so many, like I just like already know, like if they say 30, it's gonna be 50. Like and then if it's 30, like it's a miracle, like, you know. But it's so like par for the course, where whatever price a contractor gives you, like it's never gonna be like close to that. It's always gonna end up more and it's not always the contractor's fault. Sometimes it is his fault, but like they're just unforeseen circumstances that are gonna like happen.
That one house, there's like this big tree, oak tree, that's like hanging over my house. I mean, I could get away with leaving it like that, but it's like, you know, I got to spend $3,000 to chop that, trim that tree, you know what I mean? But I have to do it, right?
This is like the thing where like there's always so many decisions to be made, because like there's like you can leave it or you cannot leave it, right? So you kind of weigh the risk and the cost. Like, hey, what's the cost to like leave it? What's the cost to like to trim it? What is my exposure? And like you're constantly making so many of these decisions as a real estate investor. Like when it comes to rehab, like do I want to put a new floor in, or can I keep the old ones? Do I need to paint the house? Do I not? Like there's so many things that you're like always constantly have to make decisions. The better I feel like you can become at it as like a small decision maker.
Right.
It kind of leads to like that's where the successful guys, like they become successful, because they made so many great small decisions over. Okay, like we should cut this tree. We shouldn't cut this tree. We should hire this contractor. We shouldn't hire this contractor. We should get this tenant. Like it's all these little small ones. But they always add up to like a big number down the line.
Right. Yeah.
But it's like a learning process, right? As you're going through it, like you don't know what you don't know. So like you're in the beginning, you make a lot of mistakes, and you make the wrong decision a lot of times.
Yeah.
But that's like the learning, so that in the future you know how to make the right ones.
Yeah, like buying multifamilies. Unless I bought all those single family, those 13 doors, I would have never been in the position to be able to do what I'm doing right now.
Just to know, it's like, and the knowledge builds upon itself. So like you're going to the next step because you got all like your bumps and bruises for the smaller step. So now you can move on to like the next level and to the next level. Yeah. Is there a reason why you guys are sticking to like, let's say like the 10 to 30 doors versus like going like 100, 200 doors?
It's probably, it's got to be just fear. You know what I mean? It's honestly fear and just not being, you know, some people, like my mentors, like, hey, you know what, start with do a couple in the 10 to 20 and then go to, you know, like Grant Cardone saying buy a 200. They say that the bigger ones actually have less risk because it's spread out, but I mean,
yes and no. I mean, it depends on how you define risk. There's less risk some ways and more risk other ways.
Yeah. So I mean, that's kind of where it is right now. Just trying to stick within my comfort zone. Yeah.
I mean, it's just amazing to what you've accomplished in such a short period of time. I just want to like kind of figure out, draw out of you like how you've been able to accomplish that. I mean,
I think the biggest thing is just that urgency factor for me. You know what I mean? Like I'm 56. Yeah. I don't want to be building wealth. I don't want to be 70 years old and hit it when I'm 70, 75. Because for me, I look at it like I'm 55. If I live 20 more years, that's a good life. You know what I mean? So I want to be able to, it's really the urgency that I know that I want to be able to enjoy whatever I build and have enough time to spend it with, you know, and it's obviously for my family, you know.
What does like a typical day or week look like for you?
Typically, what I try to do is I this is one of the big things I've learned is I like everybody to sleep with their phone next to me. I before sometimes I used to like wake up at like 4:00 in the morning.
Check your phone.
And then check my phone. So now I'm like, okay, do not check my phone until at least 6:30 or so, because if I wake up at 4:00 and there's something going wrong, I cannot go. My mind starts going and I can't go to sleep. You know what I mean? So, I usually typically, wake up around 6 or 6:30, start going through my phone, doing emails, and then just pretty much looking for deals. I'm building my insurance agency kind of back again.
So you're kind of like doing real estate investing and insurance at the same time.
Yeah, but I would say probably 80% of my time is in my real estate business. But I do have to spend time on my regular job. So I do that, and then just periodically today. I mean, a lot of times I'm just like fielding calls, like through my contractors, property managers. That's a whole nother. That's probably one of the bigger challenges. Is just finding a quality property manager.
It's really hard to find because the property management business is not like really well paying.
Yeah.
So the margins are so thin. So then there's always gonna be like either they're gonna skimp on like the quality of like the team, or they're gonna be like super expensive, and then like it's impossible to find like a reasonably priced, high quality property manager. And then they get burnt out, right? Because I had a couple before, they were like excellent, good pricing, excellent service, but then they make so little that like they got burnt out, like and then like then it's like then you gotta find like a new guy again. So it's so hard.
But just constantly multitasking different tasks throughout there. I have a little whiteboard. I have to write things down.
Okay. I'm a big whiteboard guy too. I love whiteboards.
Yeah. If I don't write it down on the board, it won't get done.
But it helps you to just like sort out your thoughts, or like you can like plan or like trying to like figure things out on a whiteboard. It's like so much easier than I figured than just like thinking in your head or just doing it on your computer.
Yeah.
But so you have like a to-do list on your whiteboard?
Yeah, I do. Okay. Yeah, I have like a couple whiteboards, Okay. And then one other thing I just picked up recently too. I mean, this is not an old thing, but I wrote down, why am I doing this? What is my goal? And I write it down, and I have it like, it's just on a piece of paper. I wrote it in pen and taped it on my door. Nice. So that when you have those challenging times, that it reminds you what you
stay motivated, right? Like you don't lose the faith.
Yeah, because it's easy to quit. It's super easy to quit.
It is super easy to quit. Yeah. One of the things I started doing recently is like I've got a list of like non-negotiables that I do every single day. One of them is like sweat 20 minutes a day. One of them is look at my goals for 2 minutes. And so like I have like this little, it's on my it's an Apple Notes. So I just have like, it's only like 3 goals. And like have these 3 goals that I look at like every single day. And so like but then like just it recenters like my focus of what I want to do. Like, so.
Yeah.
But it's like, it's super powerful because like once I see those goals, then it's like, it gives me the motivation and reminds me, this is why I'm doing or like what I'm doing. So the drudgery, once you connect the work to like a meaning, it's not like drudgery anymore. It's actually significant.
Yeah.
I think there's a story like I don't know if you heard the story about like the guy who's building like a house. Have you heard the story before?
No.
So there's a guy, he's stacking bricks into things or whatever, and he's stacking bricks, right? And he's putting like the mortar in the bricks. Like, so what are you doing? He's like, I'm like stacking bricks. Like, okay, like, and so like then the other goes to there's another guy house that's building something. He's like, okay, what are you doing? He's like, I'm preparing for like the next guy who's gonna come in the thing. And then the last guy is like, what are you doing? He's like, I'm building a house for our family.
Yeah.
And then so like when you look at the way that the guys are working, they're all doing the exact same job, but one guy's like, I'm stacking bricks. The other guy's, I'm doing this for like my boss or whatever.
Yeah.
The other guy's like, I'm building this for our family. And like there's like the enthusiasm and the way that the reason why they're doing it is like completely different because the meaning behind the work is so different from like just their perspective, even though they're doing the exact same job. Like, and so.
No, it's cool. I mean, because I found that self in my trap like last week. I was trying to raise money for a deal, and then I really thought I had a potential with this person, and then he's like, oh, you know what, like 5 years is too long for me to like have my money there. You know what I mean? Like I don't want to. And then it creeps into my head. I'm like, okay, nobody's going to want to invest for 5 years, And then I'm like, you know what? I got to get that out of my head. You know what I mean? Like, you remember that's just one person, you know what I mean? And then it's because it's easy to like, fall get discouraged, right?
Yeah.
And think, oh, okay, it can't be done, but obviously it can be done,
Well, that's like, I think the power of momentum is like when you first, especially when you're first starting, you have like zero momentum. So like, you're like, out of like 10 people you ask, like no one's gonna say like yes, or all like it's all no's, right?
Right.
First, like, once you start to get like some momentum, like maybe like 3 or out of the 10 will say yes. And like when you get really like have a lot of momentum, like 7 out of 10 will say yes. It's just like that. You kind of have to build the momentum, but in the very beginning, there is like 0 momentum, so it's so hard to kind of get yourself off the ground because you don't have like the track record or like the record of success to kind of like think back and rely on.
Yeah. So it's fun, but I
yeah,
enjoy
no.
it. Yeah.
You gotta have fun with it, right? Like,
yeah.
You gotta like at the end of the day, when you put your head on the pillow, like you worked your butt off, and like you gotta enjoy like, the work as well too.
Yeah, exactly. You know what I mean? And even yesterday we put the offer. I ran my numbers, maybe stretched a little bit, but I'm like, okay, you know what? Like, I put my offer out there. At least I know I put my best offer out there. If I don't get it, then I don't get it. You know what I mean? So, you know, and I think I'm a big person, like, because it's fun. I enjoy talking about it. So I don't mind helping other people at any time, you know? And
that's really, I mean, the other thing too is like, I think when you're helping other people too, you actually get better yourself because like the coaching, like you have to process things, but just being in like the area of people who are excited about it, it just gives you like motivation. And motivation is kind of like the batteries for like entrepreneurs. Like we need the fuel. Yeah. And if you don't have enough like people to talk to or to like to get excited about it with you, then like you lose like the fuel to kind of like to keep on going.
Exactly. Yeah. Otherwise you just keep it all in yourself, right?
Yeah. So last question for you is let's say somebody who's like they're brand new to like to real estate investing and like they say like, hey, Rory, in like 10 months he's gotten 13 doors and he's got these couple multifamily deals, he's done all this success. What's one piece of advice you get to somebody who's just starting out?
Just educate yourself, you know, make a decision that you are going to do it. You know, there's so many, like, you know, if you cannot join you don't have the ability to join into some kind of community where you got to pay for it. You know, there's like bigger pockets. I love that. You know, you can watch so many of these podcasts, listen to stories that you put on of successful investors and see what they do and just draw from other people's strengths and just, you'll kind of see that the one common denominator is that everybody just took action.
Yeah, that's true.
You know what I mean? And you just got to make a commitment to do it.
Messy and perfect action, right?
Yeah.
Awesome, bro. Well, if people want to reach out to you or find out more about some of your deals, what's the best place to find you?
Yeah, so I'm on Instagram, Rory K. Lee. That'd probably be the best. You can just message me anytime or Google my name and I'm sure you can find me.
Awesome, bro.
Yeah, thanks, Tanya. I appreciate it.